Finally, we will discuss two non-refundable education credits, the American Opportunity Credit and the Lifetime Learning Credit. They are quite common and thus need to be understood. Each type of credit is claimed by completing Form 8863 and is aimed at helping taxpayers mitigate education expenses, but each has different characteristics and provides different benefits. They can be useful to taxpayers at different times and in different circumstances. Eligible taxpayers can claim either the American Opportunity or Lifetime Learning Credit for a student, whichever provides the best benefit in a given tax year. They can even claim the tuition and fees deduction instead of one of the credits, usually when their modified adjusted gross income is too high for the credits. However, under no circumstance can they claim both the tuition and fees deduction and one of the credits for the same student in the same year. Detailed descriptions of these credits are contained in the workbook. For our purposes here, we will simplify those descriptions. The American Opportunity Credit has been extended. The amount of the credit is 100% of the first $2,000 of eligible expenses and 25% of the next $2,000 to a maximum of $2,500 per student and can be used to offset both regular tax and AMT. Because it is a per student credit, it can be taken by more than one student per family in a given year. It can be taken for the first 4 years of post-secondary education. The Lifetime Learning Credit is also a non-refundable tax credit. Eligible taxpayers can deduct 20% of up to $10,000 of qualified education expenses paid during the tax year for a maximum credit of $2,000. There is no limit to the number of years for which a taxpayer can claim the Lifetime Learning Credit. However, unlike the American Opportunity Credits, the amount of the Lifetime Learning Credit does not change based on the number of students in a family. The most that can be claimed on a single return, regardless of any other factors, is always $2,000. The Lifetime Learning Credit also differs from the other credits in that it is not workload-based. A student need not be enrolled for a certain number of hours, nor be working towards a degree or certificate. The credit is available for undergraduate, graduate, and professional degree students alike, as well as for individuals acquiring or improving job skills. Even one continuing education course can qualify. In order to qualify for either credit, the schools attended must be accredited colleges. The education expense must be paid by the taxpayer's spouse, or the taxpayer's dependent in the year the credit is taken. Virtually anyone listed on the tax return who has education expense can claim the credit. There's no credit for non-resident aliens. Allowable education credits are based on amounts paid to eligible educational institutions for tuition and required course fees and sometimes books and supplies. Depending on the credit, expenditures not allowed include insurance, medical expenses, room and board, transportation, and personal living expenses. Check the table out in your workbook for specific rules. Credits must be claimed in the year that the education was realized, not the expenditures. If educational expenses are prepaid, the credit must wait until the educational year is complete. Why? Well, if the expenditure was made in December, the student may not go in January and could possibly get a refund. So the education must be complete before the credit can be claimed. And no double dipping. By that we mean that if $3,000 is spent at an institution of higher learning for the taxpayer or dependent, and that amount is put in at the bottom of your client's 1040 form as an adjustment to income, your client cannot claim that same amount a second time as an educational tax credit. To do so would be considered double dipping. You don't get two tax benefits for a single expense. The taxpayer can only select one method for deducting that expense. There are requirements, exceptions, and limitations as with all other credits. There's an income cap. If your client's income is too high, Uncle Sam will say that he can afford to pay for that child to go to college. He can't have that credit, but he could take the expense as an adjustment to income. As a rule, all eligible educational institutions are required to provide a copy of Form 1098-T, or a reasonable substitute, to each enrolled student by no later than January 31st following the end of the tax year. Be aware that your client cannot claim an American Opportunity Credit and a Lifetime Learning Credit for the same student in the same year. Sometimes this can be problematic because academic years do not usually match tax years. Regardless, the IRS says you cannot place the same student on the same form in the same year in two places. Typically, between the two credits, the American Opportunity Credit provides better benefit than the Lifetime Learning Credit, but not always. It's a good idea to calculate the tax benefit of education costs each way and choose the one that's most advantageous. These options include the tuition and fees deduction, the American Opportunity Credit, and the Lifetime Learning Credit. Most tax preparation softwares will calculate the alternatives and provide you with a recommendation as to which will be most beneficial for your client. So far, we've learned about 4 of the non-refundable credits available. In the next session, we'll speak of a few